My name is Paul Edwards. I am your financial advisor, educator with New York Life. Welcome to Investment Wednesdays. As you all know, I assist individuals and business owners to plan and save effectively for retirement. And I also help you to protect yourself and your loved ones with life insurance, long-term care, and at New York Life, we also help with estate planning. And this morning, I want to speak to you about retirement planning, and especially coming from a discussion I had yesterday evening with a client of mine. A person called me and was asking some questions concerning savings for retirement. And she said to me that she wants to make sure that when that time comes, she can retire comfortable and don't have to worry. She wants to maintain the lifestyle that she presently is living. So when it comes to retirement planning, remember that how you live now becomes a habit. And generally, it is also going to be how you would want to live. Many persons feel that when I retire, if I retire at 65, I am going to need less money than what I need now. But we have found that in many cases, it is not so. But generally, we find that when we do retirement planning, we utilize what we call 80% of what you currently is earning. We would normally calculate and say if you are earning 100,000, then you would need at least 80,000 in retirement. But the amount you desire in retirement is primarily up to you. Our job as financial advisors is to assist you to meet those goals and objectives. So what we normally do is ask you, what age do you plan to retire? Most persons say 65, 66, some say 70. That's generally up to you. And then we ask, what is your present age? So I'm going to use an example of an individual who is 50 and wants to retire at age 65. So they have a 15-year span to accumulate enough funds so that they can retire comfortably and retire on their own terms. And that is the essence of retirement planning, to be able to do so comfortably and on your own terms. So let us say the individual wants to have 100,000 in retirement. And I'm using 100,000, a round figure, because it is easier to do the maths and the calculation. So what you do is you first minus what your social security is going to be. And I'm going to use the maximum amount here. The maximum amount if a person retires at 65, 66 that they can receive on an annual basis is about $36,000. So a person who wants to have 100,000 in income at the age when they retire and will receive 36,000 in Social Security means that 64,000 is going to have to come from your retirement savings. And that's what retirement planning is about. It is ensuring that you have enough money to retire and live the lifestyle that you choose. So every person who has a 401k, most persons, when you talk to them who have a 401k, you said to them, how much do you want to get when you retire? Most of who I've spoken to don't know. They have not thought about it. This is a discussion you should have with your financial professional. As a matter of fact, any financial professional you have, if he or she is doing a good job, they would have asked you this question. How much do you want? Because how do you know how much to save? You cannot leave it up to chance. And therefore, when you ask that question, how much do you want? The financial advisor like myself can now calculate how much you need to be putting aside and investing in your various retirement accounts to meet that objectives. Normally at 65, we plan for a 30 years in retirement. If you are married, there's a 80% chance that if you reach 65, one or both of you, you and your husband, or one or both of you, is going to live to age 85. And then it goes down to a 30-something% chance that one or both of you is going to live to age 95. So we normally plan for 30 years in retirement. And doing this maths without any calculation for inflation, this is the basic maths, you are going to need 64,000 per year times 30 means you are going to need approximately $2 million in your retirement account. It's a simple maths. And so we can calculate based on how much you are saving now, and we can calculate whatever you have in your retirement account, if it grows by X percentage, what it is going to be at that time. And we can tell you if you are on track or if there is a shortfall. If you are on track, we say to you, keep doing what you're doing. If there's a shortfall, then we will make recommendations of what you need to do to make up that shortfall. So regardless of how much you want in retirement, you could want 200, you could want 400, 500,000, I don't know. You could want 50,000, 30,000, whatever that figure is, we can determine if what you are doing now is working and what adjustments you need to make. Another important part of financial planning is to make preparation for the need for long-term care, to make sure you have sufficient life insurance coverage to protect you now and to protect your family now, to make sure that you factor in things as tax efficient strategies, you factor in things such as health care and health needs. It's a comprehensive thing. But the important thing is that you must start. It is important that you call, meet with me or a professional of your choice and have that discussion. Because if we fail to plan, it is certain we shall fail. And therefore, all those who are listening to me, if you are contributing to a 401k, continue, but still meet with a financial professional to make sure that what you are doing will meet your goals. If you are not contributing to one, then you should open one now. You can go to your bank, a financial institution, or you can call me at 321-557-1155. My name is Paul Edwards, your investment retirement specialist. Have a blessed, productive, and wonderful day.